This single AI deal could create a new wave of millionaires, and most people have no idea it just happened. One company just borrowed $40 billion in a single day to buy more of the company behind ChatGPT, and Wall Street is effectively betting on a $1 trillion IPO. Let me break it all down for you right now. I am Kashi, this is SKM AI Expert, and today we are unpacking what is arguably the most important artificial intelligence and finance story of the year. If you care about AI tools, AI investing, AI jobs, or building any kind of AI business or side hustle, this one move changes the game. Here is the news in plain English. On March 27, 2026, Japanese investment giant SoftBank secured an unsecured bridge loan of about $40 billion from a group of the biggest Wall Street banks. We are talking names like JP Morgan Chase, Goldman Sachs, Mizuho, Sumitomo Mitsui, and MUFG all lining up together. It is the largest dollar-denominated unsecured corporate loan ever recorded, and almost all of it is aimed at one target: OpenAI, the company behind ChatGPT. SoftBank is routing roughly $30 billion of that money through its Vision Fund 2 into a new follow-on investment in OpenAI. When you add that on top of what SoftBank has already poured in, its total capital committed to OpenAI jumps to around $64.5 billion, giving it roughly a 13% ownership stake. That makes SoftBank the single biggest external investor in OpenAI, ahead of even Amazon and Nvidia. Now layer in the second piece of news. Just 1 month earlier, on February 27th, OpenAI closed the largest private technology funding round in history. $110 billion, raised at a pre-money valuation of about $730 billion, taking the implied post-money valuation to roughly $840 billion. Amazon led with about $50 billion, Nvidia and SoftBank each committed around $30 billion, and the round is so large that it pushed global startup funding for the month to a new all-time record. In that announcement, OpenAI said ChatGPT now has over 900 million weekly active users, more than 50 million paying consumer subscribers, and millions of paying business customers using its APIs and enterprise plans. Revenue-wise, reports say OpenAI is already at tens of billions of dollars in annualized revenue, while still losing money as it aggressively builds new models and infrastructure. Put those pieces together and you get the real headline. SoftBank is borrowing $40 billion on a 12-month clock to double down on a company that private markets already value close to $1 trillion. The bridge loan matures in March 2027, which is a not-so-subtle way of saying, we expect OpenAI to go public by then. And this does not exist in a vacuum. OpenAI, SoftBank, Oracle, and partners are also behind the Stargate project, a $500 billion plan to build massive AI data centers and energy infrastructure in the United States and abroad. Think of it as an AI Manhattan project, but for data centers, chips, and power plants instead of rockets and uranium. So that is what happened. Now let us talk about why this matters so much. At a high level, this is a signal that the age of experimental AI is over. We are now squarely in the era of industrial-scale artificial intelligence. A bridge loan of this size is not about a cool new chatbot. It is about locking in the compute, the infrastructure, and the market share for the next decade of machine learning and AI automation. Let us decode the finance move first. A bridge loan is short-term debt that companies use when they are waiting for a bigger, more permanent source of funding. In this case, the permanent money is almost certainly the cash SoftBank expects to get when OpenAI does its eventual IPO. The loan reportedly matures in March 2027. If OpenAI lists at, say, around $1 trillion and SoftBank owns about 13%, that stake could be worth $130 billion on paper. That is more than triple the bridge loan amount. From the bank's perspective, 5 of the most powerful institutions on the planet just agreed that lending $40 billion against OpenAI's future is a good bet. They are not doing that for fun. They are doing it because they see OpenAI as a core piece of the future of AI infrastructure, AI tools, and ultimately global productivity. On the OpenAI side, the recent $110 billion round tells us a few things. First, the sheer size of the raise confirms that training and deploying state-of-the-art models like GPT 5.4 is no longer a venture-scale hobby. It is a nation-state scale project. Those models require gigantic GPU clusters, custom networking, and power grids that look more like heavy industry than software. That is where the $500 billion Stargate infrastructure plan comes in. OpenAI is not just selling ChatGPT subscriptions, it is building the railroad and the power plants of the AI age. Second, the investor mix matters. Amazon is putting in tens of billions tied to a long-term cloud and chip partnership. Nvidia is contributing a huge amount of capacity in the form of next-generation GPUs and data center build-out. SoftBank is writing gigantic equity checks and borrowing on top of that. This is not classic early-stage venture capital. It is closer to sovereign wealth, but directed at one company. Third, the usage metrics explain why investors are willing to play at this scale. When you have close to 1 billion people using your product every week, and you are becoming the default AI tool in everything from office suites to code editors to health apps, capital starts to see you less as a risky startup and more as critical infrastructure. Now, how does this compare to the rest of the AI landscape? Anthropic, Google, Meta, xAI and others are all raising huge sums and shipping powerful models. But nobody else has announced a single funding round anywhere near $110 billion. Nobody else is at an 800+ billion private valuation while still being unprofitable. And nobody else is at the center of a named $500 billion infrastructure program that is explicitly tied to their models. In simple terms, this deal is capital saying, we think OpenAI is not just a player in artificial intelligence. We think it might be the operating system of the future of AI. So what does that mean for money, markets, and your portfolio? Let us start with SoftBank itself. This is classic Masayoshi-san. He made a legendary bet on Alibaba 2 decades ago and turned tens of millions into tens of billions. He also got burned on WeWork. This OpenAI move is that same playbook but scaled up to a level we have never seen before. If OpenAI does go public near $1 trillion and maintains growth, SoftBank stock could see enormous upside, because a huge chunk of its net asset value will be tied to that one stake. If something goes wrong, if regulation hits hard, or if the hype gets ahead of reality, SoftBank is also the one holding the bag. For US investors, that risk-reward profile will make SoftBank a very volatile AI stock for anyone playing the AI investing theme. Next, think about the ripple effects across public markets. Chip makers like Nvidia, AMD, and others are effectively selling the shovels in this gold rush. Data center operators, cloud providers, and utilities feeding power to AI factories all stand to benefit from a $500 billion infrastructure build-out. If Stargate and similar projects really deploy 10 gigawatts of AI compute capacity, that is a huge multi-year order book for chips, servers, cooling, and energy. On the other side, many traditional software companies that do not aggressively integrate artificial intelligence or AI automation into their products are already seeing investors rotate away. When one AI company can raise more in a single private round than some entire sectors do in public markets, capital becomes very selective. What about regular people who want to make money with AI but are not running a hedge fund? There are a few layers here. First, there is the direct investing angle. You cannot buy OpenAI stock yet, but you can get exposure through companies that are clearly leveraged to its success. That might include big cloud providers, chip makers, or even SoftBank itself. You should absolutely do your own research, and remember, this is not financial advice, but the theme is simple. Follow the picks and shovels of the AI economy, not just the shiny apps. Second, there is the builder angle. When a company like OpenAI raises this kind of money, it is not just to improve ChatGPT, it is to launch whole ecosystems. We are already seeing tools like GPT 5.4 with million token context windows, native computer use, and agent-style behaviors. That means you can now build AI-powered products that read entire code bases, manage workflows across multiple apps, or act as 24/7 digital employees for small businesses. If you are a developer, a marketer, a consultant, or even a solo freelancer, there has never been a better time to create an AI side hustle, Jianxi. You can package specialized AI tools for real estate, healthcare documentation, legal research, e-commerce optimization, you name it. The infrastructure that SoftBank is helping finance is what makes those ideas actually viable at scale. Third, there is the jobs angle. Reports from places like the World Economic Forum, Goldman Sachs, and McKinsey Jianxi all suggest that somewhere between a fifth and a quarter of the tasks people do at work could be automated or heavily assisted by AI over the next few years. That does not mean all those jobs vanish, but it does mean the shape of work is changing fast. Jianxi. Some roles will shrink, Jianxi. Routine office support, basic customer service, low-level content production, repetitive analytic work, and parts of software development are already being eaten by AI tools and automation. At the same time, new roles are exploding, Jianxi. AI product managers, AI operations engineers, prompt engineers, AI safety and governance specialists, and hybrid roles where you are basically a power user of the best AI tools of 2026, Jianxi. And remember, big AI bets like this do not live just in Silicon Valley, Jianxi. Let us talk about real-world impact for people in the United States. Take healthcare, Jianxi. New surveys out this week show that more than half of healthcare executives now rank AI-based clinical tools as their top technology initiative. For the next couple of years, while a similar share of patients say they do not yet fully trust AI to guide their doctors. That tension is exactly where investment flows meet human reality. Jinshi. Behind the scenes, AI models are already reading scans, drafting visit notes, and flagging high-risk patients. As infrastructure from projects like Stargate comes online, those models get faster, cheaper, and more widely deployed. Picture a small community hospital in Ohio or Texas. Instead of waiting a week for a specialist radiology read, an AI system can flag subtle signs of stroke or cancer in minutes, giving doctors a second set of eyes. That is not science fiction, Jinshi. It is happening now, and massive investments in artificial intelligence infrastructure are going to make it standard. Second example, small business and freelancing, Jianshe. Right now, a solo creator or a 3-person agency can plug into ChatGPT, GPT 5.4, and other best AI tools of 2026 and run workflows that used to require an entire back office. Proposal writing, lead scoring, customer support, bookkeeping, basic legal reviews, even video editing and ad creation can be orchestrated by AI agents. As OpenAI scales out more compute, the cost per unit of intelligence tends to drop. That makes passive income-style AI automations more realistic, Jianshe. Think online stores that run 90% of their operations with AI agents, or consulting practices where the human only steps in for strategy and high-trust relationships. Jianshi. Third example, education and upskilling. If you are 20, 30, or even 45, Jianshi, and watching this in the US, you are now living in a world where the default assumption for most knowledge work is AI plus human, not human alone. We already see interactive tutors for math and science, personalized language learning, and coding co-pilots that feel like a senior engineer sitting next to you. As more money pours into OpenAI and competing labs, expect those tools to become more conversational, more multimodal, and more tightly integrated into everyday apps. If you lean into them, you can compress years of learning into months. Jianshi. If you ignore them, you are competing against people who effectively brought an AI army to work. Now I am curious, do you see this SoftBank and OpenAI mega deal as an exciting step forward, Jianshi, or as a worrying concentration of power in just a few hands? Drop your take in the comments. Jianshi. I actually read through them, and they often shape which stories I cover next. Jianshi. And if you are finding this breakdown helpful, you know what to do. Hit that subscribe button so SKM AI Expert can keep bringing you deep dive AI updates like this, completely free. Let us zoom out and talk about where this is going next. In the next 6 months, I expect 3 things. Jianshi. First, OpenAI will likely accelerate product launches on top of GPT 5.4 and its agent platform. That means more AI automation inside productivity suites, developer tools, and industry-specific solutions like finance, healthcare, and education. You will see powered by OpenAI buried inside tools you use every day. Second, financial engineering around OpenAI will ramp up. More structured products, more funds branding themselves as pure-play AI investing vehicles, and a lot of noise. Whenever one private company approaches a $1 trillion valuation before an IPO, you get both genuine opportunity and pure speculation. Third, the political and regulatory spotlight will intensify. When you are trying to build $500 billion of AI data centers and borrowing $40 billion inside a year, you run straight into questions about energy usage, antitrust, and national security. Expect hearings, white papers, and probably new rules. Over the next 1 to 2 years, my bet is that we do see an OpenAI IPO, or at least a clear filing, and that it lands among the most valuable public companies on day one. That event would create a whole new class of AI millionaires, from employees to early investors, and it would lock in OpenAI as a central reference point for AI stocks worldwide. It would also force public markets to answer a tough question. How do you value a company that is burning billions in pursuit of artificial general intelligence, while also powering millions of businesses today? Over a 5-year horizon, the deeper story is infrastructure. Projects like Stargate and its competitors will reshape the physical map of computing. New data center clusters in the American Midwest, the Middle East, and Asia. Entire local economies built around AI factories, from electricians and construction crews to high-end chip fabrication and grid engineering. At the same time, office towers that used to house thousands of back-office workers may be repurposed as hybrid human plus AI command centers with far fewer people. So where does that leave you right now watching this on your phone or laptop? Here is what I would do to stay ahead. Step 1. Become unreasonably good at using the top-tier AI tools. If you are not already using ChatGPT or an equivalent model daily for your work, start today. Write a list of every repetitive or annoying task you do in a week, and systematically test how far you can push AI to handle it. Treat this like learning to use the internet in the early 2000s or smartphones in the early 2010s. It is that fundamental. Step 2. Build at least one income stream that leans on AI instead of competing with it. That might be an AI-assisted freelance service, a micro SaaS tool, a paid community where you curate the best AI update and tech news for a niche, or a small e-commerce brand where AI handles marketing and operations. The goal is not instant passive income. The goal is to learn how to turn machine learning and AI automation into actual cash flow. Step 3. If you are interested in AI investing, build a simple, boring framework. Decide whether you want exposure through broad tech indexes, targeted AI stocks, or infrastructure names like chips, data centers, and utilities. You must set specific rules for yourself. For example, no more than a certain percentage of your portfolio in any single AI name, and no buying just because something is trending on social media. And always, this is important, understand that high reward comes with high risk. To wrap this up, here is the big idea I want you to remember. AI is no longer just an app on your phone. It is becoming the most important layer of economic infrastructure on the planet. SoftBank's $40 billion loan and OpenAI's $110 billion raise are not just numbers. They are a scoreboard showing where power, talent, and capital believe. The future of artificial intelligence is headed. You can choose to be a spectator, watching trillion-dollar headlines scroll by. Or you can treat this as your wake-up call to learn the tools, understand the money flows, and position yourself for the future of AI, rather than the past of the internet. If you want help doing that, you are in the right place. I am Kashi, this is SKM AI Expert, and I will keep breaking down the AI moves that actually matter for your journey. I will focus on your money, your career, and your life. Make sure to hit subscribe so you do not miss the next one, and I will definitely see you in the next episode. Stay tuned.